Welcome, everybody, to Panel 4, Immigration Effects on Innovation and Labor Markets. We are very fortunate to have with us Herbert Brucker, Daniel Passerman, William Kerr, and William Lincoln. And we're going to get this started by asking Herbert Brucker to make his comments.
Okay. Thank you for inviting me to this interesting event. Yes, I come from the Institute for Employment Research in Germany and the University of Bamberg. And the paper I'm going to present here is a cross-country paper on the impact of migration, high-skilled migration on the labor market. And having heard the fascinating panorama Richard Freeman yesterday presented, I'm aware, and I want to highlight that what I'm going to do here is very limited, because I'm looking only at one channel, how high-skilled migration can affect labor markets. It's the change in the factor proportions. What I do not address is the impact of high-skilled migration on productivity, and innovation, on technological progress. But we have many other scholars here on the podium which will do so. Can I have the, okay. Clearly, high-skilled migration is increasing in Europe, in particular if you look at flow figures. For example, in Germany, the share of individuals with a university degree or equivalent degrees has doubled within 10 years among the new arrivals in migration. And we do observe similar trends in other European countries. So that's a big issue. And high-skilled migration has clearly a better reputation as immigration as such, but still, Anna Maria Maider mentioned that there are still substantial concerns in specific groups of the population about the labor market implications of high-skilled migration. And what we do in this paper is we address the impact of high-skilled migration in a setting with imperfect labor markets and unemployment. That means we consider not only the wage effects, but also the unemployment effects. And if you have a setting with imperfect labor market, institutions do matter, and differences across countries matter. And we focus here on 3 countries: Denmark, Germany, and the United Kingdom. You may say, okay, why Denmark? The reason is not only that they have very good data, indeed they have, but I think these 3 countries more or less represent different types of the welfare state in Europe. Denmark is representing the so-called flexicurity model. So they have reduced employment protection. They have extremely high union density. They have a high coverage of collective wage contracts and unemployment benefits, intermediate level of product market regulation, and a high trade exposure. Germany is more or less the traditional welfare state of continental European countries, with high employment protection, a relatively low union density, but a high coverage of collective bargaining, and relatively high unemployment benefits. And the UK is perhaps most similar to the US. Of course, the level of welfare benefits is higher compared to the US, but much lower than in other European countries. I have here some indicators, so what you can see there, employment protection and so on, which basically the figures illustrate what I have said already. The point is that each of these institutions, collective wage bargaining, in one way or another affects the way a society or wages respond to unemployment and to labor supply shocks. That means our hypothesis is that the impact of migration and of high-skilled migration may differ across countries depending on these institutions. If we look at the state of research, many of you here in the room have contributed to that. What we do see is that we have a huge bunch of studies using the regional variation of migration. We have then a new generation of studies which looks now at the national levels, using differences between of migration shares across education and experience cells in the labor market for identification. And in particular, we have a renaissance of structural models estimating the wage impact of migration. The point I want to highlight here is that most of these structural models assume that the labor supply is inelastic. So implicitly, there is the assumption that labor markets are perfect. And there are very few studies, and I have a bit contributed to this literature, which assumes in structural models simultaneously the impact of wages and employment. That means it considers some wage rigidities and that wages might be sticky. Our theoretical approach is led by a wage setting framework in the spirit of layered analysis. And basically what we do is that we replace a conventional labor supply curve by a wage setting curve, which means that wages respond to a change in unemployment, but imperfectly depending on the rigidities you have in the labor market. You can have many micro foundations for that, collective bargaining theories, efficiency and fair wage theories, matching models, whatever you can think of. But what is perhaps more important is something like a catch-all category, which we use for the bunch of institutions you may have in an economy. So measuring the elasticity of the wage setting curve may capture difference in institutions across countries. What we do empirically is that we group, that follows the literature, the workforce by education, by work experience, by native and immigrant workers using microdata. And this grouping of the workforce is not a trivial task. We had a discussion here already out in the coffee break about what are high-skilled migrants. So that's not a trivial question, and if you do a cross-country analysis, it's not trivial empirically. So what we did is we used different classifications, years of schooling, degrees, and so on to harmonize categories. We have tested whether our findings are robust, so I do not go into details here, but we did a lot of work on that, in particular our referees requested that. And more or less the findings are robust to different classifications. But if you do a cross-country study, you will have always different education systems, and that means it's not a trivial task to harmonize that. In the first step, we estimate the wage setting equations. And what we do is we distinguish that by different education groups following a suggestion by David Card. And that has the implication if you have, for example, a higher wage flexibility or elasticity in the high-skilled segment, then you may have different implications as if this is not the case. And this helps also identifying then the impact of high-skilled migration on the labor market. In the second step, we estimate labor demand equations. So the intuition is once wages are set, firms fix their employment or adjust their employment according to the wages. And we do so by considering the potential endogeneity using an instrumental variable technique and consider the potential endogeneity between wages and employment. Having done that, then we have all the pieces together to simulate the wage and employment response to migration. That's in the nutshell the framework we use. Yes, and what we do find is indeed that those elasticities differ across countries. And as you may have suspected, we find the highest wage flexibility in the United Kingdom. So it's higher than, and at the aggregate level, the wage flexibility in Denmark and in Germany is very similar, but it's higher in the United Kingdom. What is more important, and that has then later important implications for our simulations, is that we have different patterns for the different skill groups. In Germany and in the United Kingdom, it is as we have expected before that you have in the high skilled segment of the labor market a higher wage flexibility. Yeah, and then the intermediate flexibility in the medium-skilled segment, and in the low-skilled segment, a low wage flexibility. So we consider 3 education groups following the German system, also university degree and equivalent degrees, vocational training degrees, and no vocational training degrees. And the converse is true in Denmark. In Denmark, the wage flexibility is particularly low in the high-skilled segment of the labor market. There may be different reasons for that. In Denmark, you find that you have a huge share of public sector employment for the high-skilled workers, particularly female high-skilled workers, the large education sector there. That may play an important role. Another explanation might be that you have a high union density, and the union density is higher for the high-skilled in Denmark than for the other groups in the labor market. That may play also a role. When the labor demand equations deliver the elasticities of substitutions in the labor market. And what we do find is that natives and migrants, and that's a huge controversy in the literature, are imperfect substitutes. So we support the findings by Ottaviano Perry and others. And we have done almost everything, all the suggestions by George Borjas we have applied. And we have also classified by migrants and natives by occupation groups. Yeah, because it may be the case overqualification might be an important issue. And even if we classify by occupation groups, our findings are robust. Yeah, so there's in our model that's absolutely certain that they are imperfect substitutes, but those elasticities differ. They are particularly low in Germany, and they are intermediate in the United Kingdom, and they are relatively high, the elasticities of substitution in Denmark. This has, again, important implications also for high-skilled migration, because it affects the distribution of the results. So the high-skilled segment of immigrants in the labor market is relatively small. And if you put a high-skilled shock on the labor market, and if you have a low elasticity of substitution, then you have a huge wage effect for high-skilled migrants in the labor market. And if you have a higher elasticity of substitution, then it's more equally spread over in the labor market. The other elasticities are not so interesting. They are more or less in line with the literature and differ not much across countries. Okay, we have then used these parameters for our simulations. And what we do is we simulate the short-run impact and the long-run impact. The short-run impact, in the short-run scenario, we hold the capital output ratio fixed. That means the capital stock does not at all adjust to the labor supply shock. And in the long-run scenario, the capital output ratio is constant. That means that capital stocks completely adjust to labor supply shocks. We have run a lot of times here econometrics on that, and our finding is, depending on the model you run, that either capital stocks adjust immediately to labor supply shocks, or that the half-life is relatively fast. That means 3, 4, 5 years. And the point is that labor supply shocks via immigration are relatively small, and it's relatively easy for investors to adjust their capital stock. And they are, of course, they are fluctuating, but more or less investors form expectations on migration. Yeah? So it's not so surprising that you have this fast adjustment of the capital stock. Okay, and then we have to capture the impact of high-skilled migration, we have 2 other scenarios. One is we simulate an immigration shock at the average skill level of the migrant population, which is relatively low, referring to the migration stocks, and high-skilled migration only. Yeah, so that the average skilled is more or less our benchmark. Okay, what do our findings say? the wage response to immigration is higher in the United Kingdom, and the impact on unemployment is higher in Germany and Denmark. This depends on the elasticities of the wage setting. So in the long run, the wage effects disappear because the capital stock has completely adjusted. You have at the aggregate level no wage impact, but you may have, because the composition of your workforce and unemployment risk change, an impact on the unemployment rate. In the United Kingdom, with the most flexible labor market, unemployment is declining via migration. Particularly, it is declining if you have high-skilled migration. So you have a decline in the unemployment rate. In Germany and in Denmark, it's slightly increasing. Compared to immigration at the average skill level of the labor force, high-skilled migration affects employment positively and negatively in Denmark as a consequence of the low wage flexibility in the high-skilled segment there. Yeah, so if you have high-skilled migration in Denmark, you will have an increase in the unemployment rate relative to an average migration shock. Yeah, so that follows our estimates of the elasticities of the wage setting curve. Then it's perhaps important to note that the impact of high-skilled migration is larger in all directions. Why? Because productivity adjusted, a high-skilled labor market shock is larger than a medium or less skilled labor market shock, because you expand the total workforce productivity adjusted more, because you have a higher productivity. What is perhaps more important if you think about the welfare effects are the distributional effects on the labor market. It's not a big surprise that less and medium skilled workers benefit from high skilled migration while high skilled workers suffer. Yeah? So that follows a factor proportion approach. More interesting are the implications for native and immigrant workers. In the long term, native workers benefit more from high skilled migration than from average skilled migration in the United Kingdom, while migrant workers lose more in terms of wages, but less in terms of employment opportunities there. In Germany, native workers benefit more from average skilled immigration than from high skilled migration, while high skilled immigration mitigates the adverse impact on migrant workers. Why is this the case? In Germany, the average level of the workforce, of the native qualification level of the native workforce is higher than of the migrant workforce. And if you have an average migration shock of the less skilled, then it's complementary to native workers and you benefit from less skilled, the native workers benefit from less skilled migration, and they suffer more from high skilled migration because they compete more with native workers in the labor market. And the opposite is true for immigrants. And in Denmark, it's ambiguous for high-skilled workers, while migrant workers lose more, both in terms of wages and employment opportunities from high-skilled migration. So you can see, depending on the elasticities of substitutions and the elasticities of the wage setting curve, you have a complex interaction, and the distributional effects may differ across countries. Yeah? So they are not uniform. Okay, what we have learned is that the responsiveness of wages, wage flexibility matters, and the elasticities of substitutions if we want to assess the welfare effects. This, of course, reflects institutions. We have not looked what institutions drive these effects. We have a capture-all category, but institutions certainly matter. If you have countries with a higher wage flexibility in the high-skilled segment, then you can increase overall welfare, measured as in the overall GDP and the overall wages, by having high-skilled migration. And the converse is true in the case of Denmark, but we think that Denmark it's a global level and extraordinary case. Yeah? It's the exception, it's not the rule. natives benefit more from immigration if the elasticity of substitution is low and if the skill structures differs from the native population. So natives need not necessarily benefit from high-skilled migration, at least for this factor proportion channel. The total gains for the society, that's a different story. They increase with high-skilled migration if the condition is fulfilled that we have a relatively high wage flexibility there. And also the distributional effects are better, so you have a lower inequality in terms of earnings because the large distributional effect or the adverse distributional effects of migration is on the migrant population which lives already in your country. There is a large distributional effect, and you can reduce inequality in your society via high-skilled migration, again, as long as the wage flexibility is higher in the high-skilled segment. So in terms of welfare, you can increase overall welfare via high-skilled migration, but not necessarily the welfare of your native population. That depends on the parameters. Okay, finally, this analysis has limitations. That is relatively clear. First, it's limited to 3 countries. And it's speculative to think, what does that mean for the United States? Assuming that the United States are more similar to the United Kingdom than to Germany and Denmark, then it's very likely that unemployment goes down in the United States and that the implications are more relatively favorable here from high-skilled migration compared to the continental European countries in Europe, but that is something we do not really know. I have considered only one channel. If we consider the additional channels, the impact on innovation, technological progress, productivity, that may lift all boats, and then all participants in the labor market may benefit from high-skilled migration. This is not addressed here. Yes, and what we also have not addressed, we have taken the labor supply of natives and previous immigrant cohorts as given. And we have the nice papers by Giovanni Perri and others that the labor supply of natives may adjust to an immigration shock. Yeah? That they may perhaps get more involved in high-skilled activities if you have medium and less skilled migration or less so. So you may have supply responses in the labor force. This is also not addressed here. Yeah? So that are clearly the limitations of the approach. But fortunately, we have the complementary presentations. Thank you for your patience.